Hello and welcome. It is Sunday, the 19th day of March 2017. Welcome. Let's take a look at an in-depth look on the silver charts. We'll look at the daily chart, the weekly, and the 4-month chart as well. Thank you for tuning in. My name is Derek, and let's get started. Within this sense of decline, it's finally had its bounce up to the key Fibonacci point and the newly declining 18 average. What I find very interesting within the movement is support has not been that deep. It has not come down to a more lower 17 area, which is what I would normally first expect. Normally you would find support in here and you didn't. So a lot of normally is not happening. So be it. The market's going to move as it's going to move. You got to do the best you can to adjust within such. But because of what I see, if any break comes in above here, I would expect a fast move to this point as another test, and I don't know what will happen there. This key support level has been very much established well, that on a break you're going to test the previous low with probably a first key support level on the way in between somewhere. So that would be the key information within the daily chart. Now, as far as a 18 average cross, if you are interested, this is from freestockcharts.com on the weekly. And this is the declining 200 week and the rising 50 week moving averages about to connect together. But that is just for a quick update purposes. Let's move the time frame onto the weekly chart, which is now within this band area. So you've had a spot where you establish resistance, come back to the band, which is what it's done. Now it's lifting off a little bit. On a break above this, you can basically revert this trend back over, but you're only looking for a move immediately up towards this high. If, of course, this doesn't happen, this would be a failed breakout. You would not only be looking for a move down to this low, but you'd also be making a move towards here. But when you look at this entire picture within the key Fibonacci from the lows of a little over a year ago and last summer's high, since this decline of the band, what has occurred has been trading within neutrality and has only attempted to leave it as anything more. Because on the first break below, it goes with anything in this band is neutral. That's why it's such. But since it's happened, the first move up to this point, breaking to the upside, it obviously failed. An exact hit here. Later, it attempted to break through, but it didn't. It started 9 consecutive up weeks in a row, going from a pierce below neutrality, ending with the pierce above neutrality. And now, of course, back within this range. So this is a long-term range. Will pretty much go at around 15 2/3. Up to the high of 18.5 is neutral. That's a very large range, but we're going long-term. It's a very choppy chart. There's not much more you can do with this other than trade its choppy movements or expand the chart. And we're going to do that within the 4-month chart. Going back to well before I was born, this low of $1.27, I will be using. Silver has never been at this price since I've been alive because I wasn't born here. Some of you were. I wasn't. I was born here when it was 50, but I was in what they called nursery school back then. That was the year before kindergarten. I had no idea what silver was or any of that kind of stuff. You don't invest in silver when you're 4 years old, but you should when you're in your 20s and 30s, or you should invest. And if silver is the investment, then you should look into it. But I had no idea that silver could be used as an investment or how to get it. I would have no idea what the price is. For if you would have asked me here what the price of silver was, and it was $1 an ounce or $80 an ounce or $5 an ounce, I'd have no idea on the answer. And I think today would be the same if you talk to many adults. Yeah, I'm going to give you 3 numbers for silver. It's either around $7, it's around 20, or it's around 140. How much is silver? They might be right about 33% of the time, for those that don't know. With that being said, that's why I believe the prices have been manipulated so much, because the vast majority have been and still are unaware, although there is nowhere near as many people percentage-wise unaware today as there were throughout the days prior. That's my calculated, educated opinion on such. And that's why when what should be a tremendous bull market has not been such. And I say tremendous bull market because any asset class, when you look back to 1968 and further to today, is in basically one mode, and that is pretty much bullish. You look at the stock market, you look at the price of anything, the price of schools, whatever, just regular inflation, everything is bullish. Which is why I consider this to be one of the greatest opportunities, and on a break of this level to be big. Now, what I think is a good idea when you're looking for upside areas, just really quickly with charts, is if you can scroll this up a bit, put the high to about the halfway point of the chart. And then you can see where the areas might be. And I'm going to do that. I'm going to scroll this so that, okay, so we have this high in here. We have a movement and we have a decent amount of area. This is 1200. So now you're talking about like 500 to 1200 as the area in which you would be thinking to go towards. The upside Fibonacci from here to here is actually 500 as well. So I think that's why it's important and such. And when you break key resistance, you get big moves to the upside. And I think this would not only be no exception, but it would take the cake. So then, now let's take a look at this within the chart format is concerned on the quote here, resistance test to move market bearish, else equals failed move. Because ever since I started computer programming back in probably here, I used a lot of if-else statements, and throughout my life, I try to look at scenarios and think, okay, if this happens, what's the result going to be? But if that doesn't happen, what's the alternate going to be? And this is exactly the case here, because the attempt to make this bearish after this bull run, step 1, flatten the band. Step 2, you can establish the level of support. Step 3, come back to the band and then break it. And on a break below this level, without a line right now, is the next key Fibonacci in about 519. That would be the ultimate downside target if, of course, this level fails. Else, this would be a failed move with big moves. And I'm going to point this out in an interesting example. We're going up. It's like, oh, we were up here. You want to revert it. Well, okay, go ahead. And it doesn't do it. It's like, you're here. Hey, wait a second. I thought you wanted to revert it. I mean, if you didn't want to revert it, yeah, just come to the band and we'll go higher. I mean, you're just wasting time. You're just giving people buying opportunities at cheaper prices. And you're also going to be hurting a lot of people who are going to be forced to liquidate at lower prices because of economic conditions. Why did you do that? Why did you make a failed move down here? And that's what I'd be saying to someone trying to do it and failing. And of course, I'm saying this in a sarcastic way, because that's not how you'd say to someone after they'd fail and such, because they're probably crying and not happy and everything. But let's let those bears calm down and let the bulls take over, because at some point, that's probably how this thing is going to work out. You're breaking past this resistance, having little decent green candle moves up to these 2 points, not a big surprise. And I would be very interested to see how this break would occur. I would expect on a break of this level, that near-term resistance on this time frame would probably be about 125. And then at that point, it's some sort of consolidation with the near-term levels working towards about 600 up to about maybe 1300. And again, I'm using this information for the big level moves. And then of course 120 here, well, that would be like your normal decent pop. Maybe move up to 120, maybe come back down to 50, and even maybe come back down to like 70. Who knows? And then, of course, if 120 is not resistance, yeah, we'll talk about that when that time comes, because for now, it's in this testing the area of this band. Have yourself a great day and take care. Bye-bye.